Welcome to the Trading Lounge and the Indices report, and starting with the Australian market here, just on the 8-hour daily chart here. We're looking for wave 4, as you know, and that pulls back 38.2% of the third wave. So we're looking roughly around the 5,700 here, and we'd also be looking for an A wave, a B wave, and a C wave, and that's just in simple terms. Wave 4s can get a bit complicated. They can also pull back to the wave 4 of 1 lesser degree, so which is quite close to the 5,700 anyway. The current move that's down through here so far is in 3 waves. It makes it corrective. If we had 5 waves down, see, an A wave can have 3 waves in it or 5 waves in it. That's the tricky thing with it. So it's not like it's complete yet here. However, it does have 3 waves down here so far. Now, if this was going to be a third wave, if this is going to be a 5-wave sequence, well, then I would expect this third wave here to be sharper than wave A here. So it appears that it will be a 3-wave correction, which will create a flat correction if it unfolds correctly in terms of an A wave, a B wave, and a C wave. So it probably won't come down to the 5,700 mark. Okay. Now we also need to be aware and diligent that that the move down is actually in 3 waves already. So it could theoretically just push straight up from here. Okay, so that's something else that we need to watch here. So I would imagine that if the market found support above the last supply level here, 5.9, then that would be a positive aspect, and it can move up from that point. So yeah, we've got to expect well, Tuesday in the cycle, in the bearish cycle, would see Tuesday morning up and then folding down under pressure after the open, so to speak. Well, in the afternoon session at least, anyway. So that's something that we can also look at as well. So just sort of drilling in here with that, see the move down from here can be counted as an A and a B and a C wave here. Now, if the market moves up below through this low of wave A here, then that would confirm that we are looking at an ABC correction. And as I mentioned, we could simply move up from that point there. Otherwise, we would move up into this trend line and then would move down here and then we would have 5 waves down from the high here. And then we know that if we get 5 waves here, then we'll get a counter trend back up 50-60% into supply zone, and then another 5 waves down, which will take us into the 5,700 mark. And then that would be more suitable for a wave 3 to wave 4 here as a wave 4. So we just got to be a little bit mindful of that. Intraday business here is that support on top of subgroup 1, which would be 30, a nice tested support on top of that would take the market higher to the 80, 58, 50 area here, to the wave 4 of 1 lesser degree, or to this block of supply here, volume. So if the 58.20 becomes the retested resistance within group 1 here, subgroup 1, then it's subject to further downside at that point there. So at least we know that we can work with the levels at number 2 here, the pivot within group 1, and also the support on top of group 1 as well. So you would look to take those highs out here, and the first target would be the 58.50. So look, it's a corrective pattern. They are tricky little suckers and we need to work through them, and it's just a process. And the idea is that you may have made good money in the run up and now we're in a correction. Don't give it back. When we look at CBA, for instance, as a leading stock, it's It's well into its wave 4 correction, isn't it? Yes, I could put wave 5 here. I've been sort of shifting them back and forth and looking at it and trying to weigh it up the best that I can, but it still presents a situation that we are looking at a corrective pattern at 90. Now, it may not break 90, it could just push up through there as well. So it's, it's first of all, the wave 4 here is larger than the wave 2 here. So it satisfies that wave 2 being simple, wave 4 being a bit complex. So it does satisfy that. The 38.2 retracement level is down at 88. So look, it could drop through there. I'm not quite sure. But, if we got support, say, on 92 here, then we could be looking to the upside at that point there. So this particular correction in CBA, a leading stock in the bank situation, is it can move up from here. When we look at the materials sector, BHP, I think NAB have got their confidence indicator coming out at 11:30 today, and also too at 12:30 we've got some CPI figures coming out from China. So that 11:30 and 12:30, if you're trading intraday on the local market, then you'll need to be savvy towards that. The BHP here, I have got this labelled as wave A, but it could certainly be wave 1 as well, by the by. Wave B and wave C here. I'm just putting those there as a conservative view rather than getting all hyped up that we're in a bull market. We just need to see further development. Yes, it's coming along quite nicely, and nicely in the fact that we've got 5 waves off the low here, and we're looking for an A and a B and a C. But once again, we also need to be very careful as well, and not just get lost in this pathway that we've got here. I mean, we've always had that. We've been looking, counting the waves up here and looking for the correction. But the behavior of this market in terms of corrective patterns to the upside is, yes, we are expecting larger corrections than these ones here, because we're looking at the completion of 5 waves. So we're looking for a bigger correction. They can come back to the 50 or the 61.8 retracement level. However, when we look at the footprint of this particular market, we're seeing that the corrective patterns are not really ABC patterns. They're just quite thin straight lines, really, aren't they? To a point. I mean, we've got a little bit in here and a little bit in here, but generally speaking, they're quite sort of smooth. So we could actually push up from here. So what we could do here is that the 33 here is 33 is the top of group 1 of the major trading level here, 30. So if we found a really nice solid tested support on top of 33, then we could look to go long from that point there. So 33, 30, 33, 50, and build in from that point there. So that way we wouldn't miss it either. So anyway, that's that. Yes, okay, over to the US markets, and we've got the bonds notes rallying, and we've also got stock rallying as well. So these two will part company in due course. We just need to be a little bit sort of patient when they're working in opposites, and we can understand their wave counts quite clearly. Then they can be useful. When they're running together like this, then there's not a great deal of usage in using them as an indicator, so to speak. With this market here, we've been looking at 5 waves down through to here, then a counter trend here, and then we'd be looking down for 1 and back for 2 here, and then down for 3 here. So we'd be looking for this to pull back up to the 127 area, this area of supply here, and then failing from that point there, which would give stock a chance to move higher. So, when we're looking at this here, we can track this as the A wave, the B wave, and the C wave here. So when we're getting up to this point here, that might be the time to be looking to buy stock at that stage. Okay. Yeah, one of the things that does bother me a little bit here, if this was going to be a third wave coming down here, blue wave 3 here, I would expect it to move a little bit quicker. It was good to see this move here. That helps, and it helps to see this creep up here because it's sort of slowly churning over. But I would have liked to see this on more of a sharp angle here. So I've got to be careful we don't get a situation where we've got the A wave here, a B wave here, and then 5 waves for a C wave here and finishing at this point here. It's not that I have to worry about that just yet, but it's on my mind a little bit, and I just needed to sort of share that so we can, really study this situation here, because we get a nice strong third wave here. That's really going to, that's the leg that we need to trade in stock to the upside. Okay, the S&P 500, the Dow Jones, they've got slightly different patterns in terms of that the S&P made a top here, where the Dow Jones made a top here. I prefer this top here from the Dow Jones rather than the S&P 500, but at the same time it doesn't make a great deal of difference at this particular stage of looking at this low at the bottom here. It does appear that we've got like an impulse wave up through to here. So it is possible here too that the wave 4 that we were looking for is completed in terms of an A and a B and a C here, but we'll need more price action to really understand that there. But that could certainly be done as a little 4th wave here and a 5th wave to the upside here. So, I mean, what can I really say about this here? I guess that if this low here, and I would say to look to this on the cash market, not this market. If that low there is breached, then we've got overlapping wave structures, and then that really helps us understand that we do have an A and a B and a C wave here, and that move up there helps us with that completion of this here. So yeah, and let's just have a little look here on the intraday here. I mean, we are getting an impulse wave up here, but I've labeled this here wave 4 here and wave 5 over to here, but I'm a little bit concerned about that because it didn't actually make a new low here. It's a bit of a truncated thing, so it's possible that we've got an A and a B and a C wave up through to here, so we would really need this to play out here. So this C wave here would probably finish 1, 2, 3, 4, 5, one more little push here. So it'll be interesting to see what happens as support on top of group 2 here, 65, 72 and the 80. If this can develop some sort of support here, then that will be the catalyst to go along at that point there. So just allow this number 80 here to develop a support or resistance, and then take it from that point there. The Dow Jones is looking a little bit better than that because it's moved up quite strongly now, but it's moved up to the to this number here. So once again, we can use this number as support or resistance. Now it will, it will trade above it or trade below. It will flicker around for a little while, and if you let the dust settle and you look for a nice confident support on that level there, then you could take that to the upside. And once again here, we've got a, as I mentioned, we've got a different top here. I know I keep talking about that each time, but I think that it is important. And yeah, so in this case here, we've got a clear A, B, and C here, but it could develop further from here too. It could develop as 5 waves down through to here, in terms of 1, 2, 3, 4, 5. But because it's moved up so far, and on the cash market, it needs to take out that low there to confirm that we've got an ABC. But the other point too is that even though we've got an ABC, that can still be the first leg in a correction. Yes, it can go straight up here, and yes, we can get a B wave here, and then a C wave in 5 waves here as well. That's also possible here as well. So that's something that we need to work through as well. it is a little bit weak because it dropped here quite severely through here. Okay, so, and yes, it is recovering, but support on this in step one for short-term traders, that support there is, is paramount, really. And yes, once again, see, this is the low here. I'll just check with the cash market here. Just hang on a second. Just double check that. I want to see what lows, what low. And then we'll have a better understanding. Nope, that's fine. Yeah, that is the low here, and that's the same for the S&P. So we do have an impulse wave to the upside. So we're going to get something like this here, and then so it could go 1, 2, 3, 4, and 5 to the upside here, or it could just go as a B wave in 3 waves, an A and a B and a C wave to supply here, and then here. So if you're trading from 1800 here, 18,000, then you really want to get to 100, get out and wait to see if you can get support there. This little move in here is a nice little impulse wave unfolding, but as I mentioned, expect some type of corrective here, something to rebalance this move here. So just be a little bit patient for that to settle in and move into the next session. Now, the DAX is positive. Okay, I've got the big monthly picture here. We can go through that. So essentially we got wave 1 here and wave 2 here, okay? So we're in there's no doubt that we're in a bull market here, okay? So that's kind of good news, isn't it, And that means that other markets around the world will be, won't be far behind in their own way. What we're working with at the moment is 5 waves up from wave 4 here. And currently we're looking for the top of the 3rd wave at halfway between 2 major levels, 10,000 and 13,000. So that brings us in at 11,500 here. So that's our that's our medium level there, and that's where we're looking for a corrective pattern just on the daily chart. So we've got 1 weekly, 2, 3, 4 across here. So we are looking for a correction here. Now, yes, it can go high. I was looking at the stock 50 here. It's just so it could take that high out through here. And I'll just go over to the stock 50 chart here because I was looking at that. This is kind of a bit of a bridge. It's kind of stock 50 is the top 50 European stocks, of course, but it has got a fair bit of weight to the Footsie, in fact. So we can see here that this price action here for wave 3 and 4 here was very similar to the Footsie. And the Footsie also had this particular move up through here as well, but it didn't climb as high. All it did was churn. And we can look at that in a moment too, and you'll see that it's only moved up half the length of this market here. But what this does is it points out that this is actually not complete yet. So I've taken wave 1 to here and wave 2 to here, then wave 1 and 2 to here. This is I've counted with a bit of care. I've counted this. So this is all the 3rd wave through here. It's all part of the same sequence. We drop out of the sequence and then up to the next one. So it's possible for this market to push higher, which leaves the DAX and the Footsie to move higher as well. So coming back to the DAX here, there's a couple of places that I could have made mistakes here. And the first one is from wave 4 here. I've looked at this as all being wave 1 here, but in fact that can be wave 1 and 2 into here, and then I move up through to here. And what this does is that this does create another wave like on the top up here, okay? It creates like this being the 5th wave here. And also that mistake that I just pointed out to then, it's possible that I've made a little mistake in this little sequence here as well. But look, to be honest, I'm not I'm not that bothered about it because, in one way or another, even if we do get a new top here and then we come back and we get another top here, I'm still looking for a corrective pattern here. Okay, so it doesn't affect day traders, but it only affects trend traders looking for, something, 50 points or something, something of, 100 points or something. So it doesn't, but, scalpers and longer term traders, it doesn't really matter that much. And yes, it will affect stock if this correction unfolds here. And yeah, and I expect it will. I understand the numbers and this medium level here should play out like that. So yes, it could go higher to halfway between here, so 11,650, the 65 number. It's like BHP bottoming at 2650, that 6 and that 5 number there, they play a strong part. It's good to be aware of them. So so we just really got to work through this here. As it stands at the moment, I'll just leave this fifth wave here, and obviously it looks like it's wrong because I can see an impulse wave building up through here. So even so, we would see a little wave 4 here, a little wave 5 here, and then we'd see a move back from that point there. So not a lot here as such. If support is found on 600, well then short-term traders use that support to trade up from that point. And it's simple as that. It's all about support and resistance and a bit of money management and understanding the Elliott structure to stay within a 5-wave sequence, to stay within the trend. And yeah, now the Footsie here, you can see when you can compare this price action all through here to what we just looked at with the stock 50 here. If I go back to the stock 50, you can see how nicely it is through here, and then we come to the Footsie, how sort of compact it is and how messy it is. So it's been a bit of a struggle in terms of the wave structure here. It's been a bit of a guessing game in trying to, all I could do is probably line it up with the stock index as such. And what that would do, it would make a new wave high coming in, because if I looked at the stock index, then I would have to put wave 4 here and wave 5 here, and would be looking for a 5-wave move up through here, and then fading back from that point there. So, and then this would be the A wave, the B wave, and the C wave here. So I'm a little bit unsure about this market, and I have been through here while it's been churning. It hasn't really been delivering good trends as such. So we just need to be a bit mindful. I think there's better markets to trade than this one. We're just really going to leave this one alone a little bit here. It's trading under its old highs of 6.9, which puts it into a bearish mode. And, this here is, I've labeled it here with 5 waves, and that's fine. But, it's not really churning. It's not really displaying a good thing to the upside. It is in a way. We've got like 1 and 2 and 3 and 4 and 5 here. So, while it stays above this low, it can creep higher. But, there's the other indices are moving much more freely than this one here. So, yes, it could catch up, but it's not while it's at 6.9 anyway. Okay, well, I think that's it. So alrighty, cheers.